Hi everyone. Good afternoon. Welcome back to the second edition of our Investor Readiness series. Welcome to our Investor Readiness episode 2. This episode will be focused on demonstrating market traction and growth potential in your business for you to be investor ready. As you all know, my name is Tolani Thomas Allison. I am the CEO, Principal Consultant at Halisi Consults. And today I will be talking about investor readiness, demonstrating market traction, demonstrating business traction, and showing growth potential for you to be able to attract investors. So I'm streaming live from all my devices right now. So we're live right now on IG, we're live on YouTube, we have a Twitter space going on, we're also live on LinkedIn at the same time. So forgive me if it feels like I'm not looking directly into the camera or if I'm not looking directly at you. Um no worries. That being said, thank you for all the responses that we got from last week's edition of the Investor Readiness series. We had a couple of people book consulting sessions or consultations with us to talk about how to get their businesses ready for investors. So we really appreciate that. If you can just click the link in our bio on what platform you are on, or click the link in the caption, you would be able to find a link that helps that takes you to a page to book an investor readiness consultation with us at Halisi, and when we can walk you through the process of getting financing for your company. If your company is a small business, if it's a medium-sized enterprise, or if it's a startup, so we can help with the investor readiness process. We can also help with getting you ready to be able to pitch to investors on your own. Today's topic: showing traction and growth potential for your business. Traction is something that is heavily debated when it comes to, you know, startups and businesses, small businesses alike. Traction can be defined as the progress or the momentum of a small business or a startup company. Now, the indicators of the company's growth potential is actually traction. So it's one and the same: traction and growth potential. And the speed of this growth is what indicates that there's traction in the business or the business has potential for investment. Now, there are several ways to measure growth in your business, which includes a wide variety of how you know traction can be earned or how it is measured. But the established ways of measuring traction, such as your revenue reports and lifelong customers, help determine these help determine the scope of traction in your business. So today I'll be talking about the factors, the things that investors want to see when it comes to determining traction in your business. um when you're in conversations with potential investors or even just financial institutions that are going to give you capital for you to grow your business, you hear things like: who are your off takers, or what is the total addressable market for the service that you're providing or the product that you're selling. So that's what we're going to be covering in this episode of the webinar. So investors want to look for signs that there's a lot of growth potential in your business, in the sense that if they give you money, if they invest in your company, um they will be able to recover their investment because there's a lot of demand for what you're selling, essentially. So you need to be able to demonstrate that to them and convince them with this factor. This is one of the factors that investors need convincing on, and you can show that to them when you document traction or off takers or demand for your products or services in your pitch deck and in your business plan, and also with your financial projections where you show the growth trajectory that your business will have in the next 5 years. So investors always look for signs of growth to determine the potential of a business. So they have to make sure that not just that you have an idea, they have to, and investors have to ensure that um it's not just an idea you have, that you also have to show that your business has potential to grow exponentially and be able to make more money for them in the future. So the honest truth is this: small businesses have typically 5 years to survive. Most of small businesses fail after 5 years. Most startups, 9 out of 10 startups fail. That is the honest truth. And the realistic nature of it is that not everybody's going to be a success. But what we can help you do at least is help prepare you for the reality of that, and also help prevent your business from failing. So I'm going to be covering how you can show traction to your investors in this webinar. A lot of businesses fail because they don't have product market fit. Now, product market fit is something that is heavily debated in the sense that, when you start a business, it might be hard to get the first few clients, and then your first 10 clients, your next 100 clients, etc. Um, at the beginning it might be hard, but then this is one of the things that you need to show, or that you need to achieve in your business, to be able to prove to investors that you're a viable investment. So you need to thoroughly research your industry and understand the marketplace dynamics of your industry, like how it is to get customers, and not just get customers but consistently get customers month on month, for you to hit an expected financial goal. You need to be able to demonstrate that clearly in your business, and you can do this through your business plan, your pitch deck, and your financials. So you also need to, like I mentioned, show your investors through a business plan that your business is a viable investment, and they need to invest in you, um with an airtight business plan that would show the feasibility of you being successful, and how much potential there is in the industry that you're operating in. You can also show traction through public sentiment. Now, if you look at the different companies that come up over time, you see that these companies are following trends. If you notice recently that there have been an uptick in companies that are providing you know quick loans for people, mobile app loans, things like that. So what is happening is that those companies are following a particular trend of businesses that are launching in Nigeria right now, and they're listening to what the market is saying, what customers want, what people need from them. So they're changing the way that people approach seeking loans. In the past, you would probably have to have gone to a microfinance bank to secure a loan for as small as 50,000 naira, but now with these loan apps that are trendy and coming out every day, you can secure a loan for 50,000 naira just via the app. So back to topic. Business traction is achieved when a business is perceived or received as a repeatable, financially sustainable at scale, and for growth. So business traction is when a business discovers a repeatable and financially sustainable way to make money for their business month on month, for revenue growth. Traction usually comes from the repeated experimentation with different service offerings, different markets, and also from brainstorming, outside suggestions, or sometimes it's just luck. But traction is when you are able to repeatedly show that your business is profitable, or your business is has potential for generating revenue month on month, and then eventually build that up to a solid annual revenue financial position. So I'm going to talk about different types of business traction metrics. Some are great, some are not. Some might be confusing for businesses, but most of the time there's some particular traction indicators that investors are looking for in your business before they now decide to make a decision on whether or not to give you capital that you need to grow your business. So there's no single metric per se. It's usually a couple of indicators that you use to demonstrate traction in your business. Number one is generating revenue. For me personally, as a consultant, if a business is not generating revenue and they are seeking funding, I typically would advise that they, review their plan. So being able to generate revenue is an ultimate sign of a business potential for growth. Um, the first sign of success in any business is profit. So for small businesses, For small businesses, what is important is that you are able to demonstrate that your business is already generating revenue, and this will motivate investors to invest in your business. This will also motivate financial institutions to give you capital that you need to grow your business. Now, for startups, on the other, for tech startups, sometimes the startup might not be generating revenue, but might be able to raise funding already. But this would be determined by the strength of the founder's reputation, or the founder's experience, or the founding team's experience. So some startups are able to raise money without even one business transaction. This is solely based off the strength of the person that founded the company, and the strength of the team that is leading the company, and investors believe in them so much that they give them funding without even one single transaction. But in all honesty, the reality is that for black business owners, for businesses operating in Nigeria, your business is to be generating revenue already before you can get funding. So for tech startups, your business needs to be generating minimal revenue at the very least. It doesn't necessarily need to be profitable, but that's for tech startups. For tech startups, don't necessarily need to be profitable to raise funding. However, small businesses and medium-sized enterprises need to be profitable, need to show sizable profit margin before they can raise capital for their business. Also, number of users. So the next thing I want to talk about is the number of customers you have, number of users you have, as an indication for traction and growth potential for investors to be able to give you capital into your business. So for small businesses, you need to have recurring revenue monthly from your off takers or buyers that are willing to buy your services, you're willing to buy your goods on a monthly basis. You must be able to demonstrate that you have a ready market, or a group of people that are ready to buy your products before investors will even take a look at your pitch deck or your business plan. Same goes for tech startups as well. Another thing that's another indicator that investors need to know whether your business has enough traction or has enough growth potential to seek funding is innovation. So how innovative is your product? How innovative is your company? What are you doing that is so different from everybody else in your industry? What makes your business so unique? What is your unique selling point? What is your unique value proposition that investors can now say, okay, the way these people are approaching this business idea is really unique, and there's nobody else doing it like them in their industry, in their market. Therefore we should give them a listen. So that's one of the indicators. It's an indicator that investors will look at, but it's not something that is an individual indicator. Innovation is great, yes, but it's not the only thing that investors will be looking at if they're going to give you capital for your business. Another thing is online traffic and engagement. So now a lot of people focus on this one, the number of followers they have, the number of you know likes and engagements and comments, etc. Those are nice to have factors. I mean, it's nice to have it there. It's nice to know that you have presence online. It's nice to know you have social media following, etc. But it is not enough to convince investors. It's a good indication that you have traction if you have an active social media following. It's just nice to have. It's something that, okay, it's there, but it's something that can always be built over time. So it's nice to have it, but it's not a must have. But it just needs to be there in your war chest. The next indicator that I want to talk about when it comes to indicating traction for your business to attract investors is media presence. Now, a lot of people don't really focus on this because it looks unnecessary. But let me tell you something. Investors, especially investors that want to invest in tech startups, that they're looking for companies that already have clout. Now, clout is one of the things that, as much as your business may already be generating revenue, your business may have the best innovative idea. You might have a great team, online traction, online traffic, social media, all done. But if most of the time, if your startup does not have clout, like if people don't mention your name in, one-on-one, word of mouth conversations, because of your media presence and because of how much public relations activities you've done, investors might not be motivated to fund that startup. It's a thing, trust me. And I've been in conversations where we're speaking to an angel investor, we're speaking to a venture capitalist, and they're asking questions about the startup, and I can tell that because the startup does not have enough clout, or because the startup does not is not as popular as the other startups out there, it kind of skewers their decision a little bit. And it's understandable, because if if a startup isn't, how will I say, extremely popular or extremely famous with their target audience, it's usually an indication that they haven't gained enough traction for them to seek investment. So media presence is something that you need to note down as a CEO or as a startup founder seeking funding from investors. So positive media coverage is great, and it indicates business traction as well to investors, and it also means that that your business is on a growth trajectory if media companies, of if media houses, online blogs, etc., are already noticing your business. You find that for tech startups, typically they want to be featured on platforms like Tech Cabal, Tech Point, or even TechCrunch, to show that they're really doing very well in their business, and to sort of make an announcement to investors or potential investors that they are ready for funding. For small businesses, you want to be featured in publications like This Day, Business Day, or like Osa Halisi be interviewed on Channel TV. So media presence is always a good indication that your business is gaining traction, and gaining the attention of your target audience, which is a good indication for investors to be able to invest in your company. So another metric that is probably always ignored is partnerships. Now, business partnerships between your company and other companies that offer complementary services, shows that you're ready to do business. So when you have strong B2B partnerships that are generating revenue for you, that you're not necessarily having to do marketing for, but the partnership is on its own generating revenue for your business, is a good indicator to show investors that you're ready for funding in your business. I'll give a quick example today. So today I saw one of our friendly companies, a friend of Alisi, Messenger. Messenger is a logistics last mile delivery company, and I just saw that they have signed a new partnership with another logistics company to serve their target audience in a different state. So it's simple partnership like that shows investors that you're ready for business and you're serious about taking your business to the next level, and it's a very good indication of traction if other businesses are willing to partner with you to serve their target audience. Next is share of voice. Share of voice is a very tricky one. So share of voice is something that to present it, in a simple way, would be that when they mention your industry, your business name gets mentioned no matter what. So when people are talking about consulting, they mention Halisi Consult. Hey, shameless plug. When people are talking about delivery companies, they're mentioning GoCarda, they're mentioning Messenger, things like that. When people are talking about loan companies, they're mentioning, actually no, I'm not going to give anybody free adverts. But when people are talking about your industry, you being your business being visible enough for people to see, you having a large share of voice means that you have potential for having large market share, and that's a very good indication to investors that your business is um on track for great growth potential and is a viable investment. Now, another indicator that investors are typically looking at when they want to determine if your business has traction or not is looking at the investment opportunities that are in your industry. So when hi, so someone is dropping a comment about media presence. Thank you for that. And someone's dropping a comment about pest control. Yes. So if your business is being mentioned in rooms that you're not present as the market leader or a good player in your industry, that's a very strong indication that your business probably is a viable investment, it's a good traction indicator. So tracking investment opportunities. So it's very important to indicate traction in with different metrics. Now, tracking investment opportunities means that start for investors, startups are aware of the investment opportunities that are available to them, and also their industry is ready for investment. So I'll give an example. So for tech startups, typically when a tech startup fails, for example, you hear things like, oh, they were too early or they were before their time. That's an indication that your industry might be sort of ready for investment, but not, for the product that you are building. And it happens. I don't want to give any examples because it's a very painful thing when it does happen, but it happens when your business is too early in the industry or in the market. It happens that investors might see it as, okay, this is not the right time to make this investment into this kind of company because it's too early, and what the market is saying that maybe 2 or 3 years further down the line. So an indication of traction, not just for your company but for your industry, is that other companies similar to you are receiving investment. So if other companies are similar to you are receiving um, capital from venture capitalists or from private equity firms, it's a very strong indication that your business already has traction and your business is viable for investment. So yeah, I'm just going to wrap it up here and keep it simple. So I've talked about a lot of indicators of traction for your business. So generating revenue, having off takers and users, your business idea being innovative, having a unique selling point or having a unique value proposition, online presence, online traffic, having social media presence, things like that. It's not a must have, but it's a nice to have. Also media presence, PR, having media mentions on relevant blogs or um TV channels also is a good indication of traction. And forming good B2B partnerships with similar businesses to you or businesses that have a similar target audience is a very good indication of traction as well. Having a sizable share of voice in your industry, meaning that whenever they're mentioning businesses in your industry, or whenever your industry is being talked about, your business is mentioned. Also, I think I mentioned the strength of the founder, the strength of the founding team, and your employees. Another thing to probably note for that is that you have to have a sizable employee count. That is something that investors look at. So that is an indication of how fast you are growing. If your number of your employees are growing quarterly or annually, it's a very strong indication that you are growing fast. For example, if your business when you started it was just you and two other employees, and in year down the line there's 10 of you, that's a good growth rate actually. Might not be a great growth rate for tech startups, but it's something that investors can key in and say, okay, this business is growing because they're growing in number of employees that they have in the business. So the strength of the employees, the strength of the founder, the employee count, and also tracking investment opportunities. So investment opportunities in your industry, in your market, is a strong indication that your business is viable for funding. It's not dependent on your company to show that kind of traction, but it is an indication that your market, your industry is ready for funding if other businesses that are similar to yours are receiving funding as well. So yeah, that's essentially it for indicating or demonstrating business traction and growth potential to investors to be able to attract them to give you the capital you need to grow your business. Like I said earlier about traction, another thing to notice: traction is the signal that cuts through the noise. That's actually a quote. Traction is the signal that cuts through the noise and the proof that you have something worth investing in. That is it. Traction is the signal that cuts through the noise and the proof that you have something worth investing in. That's what traction is. So if you can show traction in your business, you can definitely attract investors for your business. So that brings us to the end of this session. It was great as usual. Thank you all for joining. Thank you all for coming in to listen to me. Thank you for the comments. Um, my name is Tolani Thomas from Halisi Consult. Holistic Consult is a business development consulting company. We help businesses launch, grow, and thrive with our business planning services, our investor readiness services, and our marketing services. If you would like to book a free clarity consultation with us, just click the link in our bio. You see the drop down, you can book a free clarity consultation with us. If you want to talk more about investor readiness and getting your business ready for investors, click the link in our bio and book the investor readiness consultation. And we will give you a clear breakdown strategy of how you can get your business ready for investors. So please, if you have any questions, let me know. If not, I'm gonna end the live here. It was a good time. Yeah. Okay, dog. So thank you so much for your time. Someone says on Instagram, it's always a thing or two to pick from. Oh, thank you so much. Always a thing or two to pick from your sessions. I'm gonna screenshot that. I get it. Brilliant. Thank you so much for that. We're gonna continue the series for the next 8 weeks. We have 8 more, and after that, I'm done. So anyone that asks me any questions about investor readiness, I'm just gonna refer them to these videos. Anyway, thank you all for your comments. Thank you for joining, and thank you for your time. Till next week. Bye bye.